Roberto Ruarte. Welcome to F.A.C.E, Roberto. I'm making you the presenter now. Looking forward to hearing your voice and seeing your screen, and want to thank you for the real nice promo that you put together for us, Roberto. Thank you very much. It's nice to meet you.
Okay, Dale. Thank you very much.
All right, buddy. I was showing people the beautiful tweet you put together. You know, I have to say, you're the first person I've interviewed, maybe 1,000 by now, that put some energy into, you know, how special it is to be interviewed by me. So I appreciate it. Thank you very much for being here. I know that English is your second language, but you know, the charts that we have on our screen right now is a universal language, isn't it? So
yes, I think so. I think so.
Okay.
Yes.
So why don't you tell us a little bit, Roberto, how you got into the trading industry, how it was for you in the beginning to get you to this point where you're providing research for people in the market. So tell us a little bit about your trading journey.
Yes, I began to study the market 25 years ago. First, I read some books about technical analysis from 1990. I went to United States, to Atlanta, Georgia, to study with Roberto Jr. Yes, the Elliott wave is my first. Yes, okay. I went to Atlanta, Georgia 5 years. 5 years and study Elliott wave. I am opinion, okay. Yes, I like very much to study cycles, to study long terms, and so I trade in the short term in the market, okay.
Right. So you're so really wow, what an influence to have. Let me ask you this: did it? Because we know what kind of long-term bias Prechter had. I mean, for a long time, he was looking for the stock market to fall apart. You know, he's also called some great longs and stuff. But overall, if you're a Prechter follower, you're looking for the end game to be a deflationary scenario and cash to be king and everything to go down. Am I correct that that's his long-term outcome? That central planners, central bankers interrupted it for about 8 years, 9 years now?
Yes, I believe that the market clearly. I can show some chart for you. This is between the US dollar index, yes, and the gold. No? Yes,
and the gold.
And gold, yes, US dollar and the gold. This is the gold, and this is the US dollar. The US dollar have a cycle. For example, you have 7 years.
Yes.
Dollar downtrend.
Right. 7 years down.
7 years down. 7 or 8 years up. 7 or 8 years down again, 7 or 8 years up. This is the cycle, no? I believe this began at the bottom of the market 8 years ago, and I believe that maybe the last year and the cycle, the stronger, the super dollar for me has finished. Okay. And then
so 104 was the approximate high on the move. That I mean, there still are some dollar bulls left. They'll probably buy breaks all the way down. But what will give you confirmation that we're headed down for the next 7 or 8 years from this year? What technical level would it be back under 92, closing under 92?
Yes,
that would be your
yes,
confirmation?
yes.
Okay.
This level is the fourth of Lizard degree. For me, is very important. Yes.
Okay.
Market break down this level, we have the confirmation on the long-term cycle again, the dollar to the downside. Yes, but this chart showed that the goal is inverse to US dollar index, and at this time the goal go up very sharply. At this time of the super dollar, the gold go down very sharply, and at this time the gold go up, and the other time go down is inverse. Okay, and I believe that the next 5 and 8 years may be the time to the gold. Okay, I'm very bullish about gold and precious metals. I believe the gold miners is very good for the near term and the medium term and long term. Okay.
Okay. They're all lined up now.
See, the next 8 years for me will be dollar with the for the downside and the gold for the upside. Okay.
Okay.
The first chart that
when it comes to the dollar index, which is heavily weighted euro, which has been leading the way, is that your preferred long, the long side of euro over, say, pound or anything else? The euro?
Yes. I'm going to see several close.
Okay.
Obviously, I believe that the euro maybe bottom 103, right. And then the main trend is up. But in the short term, I believe that all traders are very bullish about euro. I'm very bearish about US dollar, and then this is the problem to continue the trend. I believe in the short term is possible the correction for the euro, yet correction for the dollar to the upside, because the market fell down very sharply. The dollar always are very bearish to the US dollar, and I believe the market needs a counter trend rally to improve the numbers, and then the dollar will be ready to resume the downside trend. Okay.
Yes.
Okay. The other chart for me is very important to do to show. Sorry. This chart should show that the relation between the commodities and the
stocks.
Stock, yes, the stock. If you can compare, you can see that this level is too cheap. I need a little low. I need a little low to buy some commodities. Okay, and then my question is, or commodity are very cheap, or the Dow are very expensive, or both of them. No, okay. For me, it's time to buy commodity, and it's time to sell stock exchange. Okay, United Stock Exchange.
It's time to sell U.S. shares, except commodity-based shares like gold shares and oil shares and copper shares.
Yes.
Do you think that the shares with underlying commodities being their business will be able to prosper in a bear market in equities overall?
Yes, I believe, for example, the gold miners, I like very much gold miners. I don't like much oil, because I believe the oil is not complete the bear market.
Are you looking for new lows under last January's lows in the crude? Like for a lot of bears are looking for 25 again. Are you?
Yes, I believe so. I believe that the movement from $26 in oil is counter-trend rally. I believe it's wave 4. Is wave 4. Maybe wave 4. Maybe a triangle. Maybe 55 was the top of wave A, or is the top of the wave 4. In this case, I prefer another down leg to the downside below $25. The oil is the only commodity that don't like. I like food, yes. I like.
So all the grains, all the softs, coffee, sugar, soybeans, corn, wheat. Cotton.
Yes, I like food and I like precious metals, but basically, okay. Yes, I don't like, for example, banks. I believe the banks are in the last in wave 5, for example, and XLF for me is very near to the top. Yes, 25 maybe. Yes, Goldman Sachs and JP Morgan for me are time to sell. Yes.
Okay.
I believe
what do you think about everyone shorting volatility? That's been a discussion lately. The VIX trading at 25-year lows, etc. Are there any ways that you play something looking for higher volatility? Because most of the instruments have major decay in them.
Yes, I believe the volatility is in the low in the history, and now I have one chart from 200 years from volatility, and the volatility now is in the low, is in the lowest level of the history. I believe buy, and obviously when the volatility is very cheap, the market is very confident about risk, no? About
they're getting now euphoric.
Yes, because see, and for example, most of investors prefer to buy some bonds of Argentina, some bonds of Gazprom, some bonds of Petrobras, some bonds of maybe PDVSA.
Because they're desperate for yield. Right?
Yes. Young bonds against treasury bonds of the United States, because the rates in the United States go up, and the other the inversion prefer to take high risks. Okay, I believe the market in general is prepared to a big downtrend, a big bear market. Not United States from 80, we never have a correction last more than 25% in the Standard & Poor's, or 20% in the Dow Jones. I believe this year, maybe August, September, October, maybe the beginning of the bear market in the United States. I believe that this bear market will be with the dollar downtrend.
Dollar going down.
Yes, the dollar going down, and the gold go up very sharply, I believe, no? And then and then I'm going to prepare my portfolio for this situation.
Okay.
Other charts tell you what's happened with the bull market in Standard & Poor's. This is the second more important bull market from the history. Okay, you can see in this. Okay, and this is the best one, no? The best one.
Yeah.
100% to the upside. Right. Clinton time, yes. But this is if you have the low of S&P 666 from this level, we have 270% of increase. I believe it's very near, it's very old, the bull market, this time to prepare for the bear market. I believe a correction in United States for 50% or 40% or maybe like 8 years ago, okay?
Okay.
But if you want to say what's happened with the US dollar index, the US dollar, for me, this is my preferred tone. Yes, this is the US dollar, okay. The currencies, the all
right.
7 currencies, okay. I believe that top in 100 and
so down the rest of the year to the 90 level. That's what you're looking for?
Yes, I believe that this is the top, is very important. I believe the market go down to this level. This level is very important, 92. Very important. And I believe that the market break down this level, 19. I believe the bear market will confirm for the US dollar. Okay.
Okay, so let's call it weekly or monthly closes. I don't know if this is a weekly or monthly.
Yes, for me, weekly closes is
weekly. Okay, so weekly closes under 90 seals the deal for a long-term bear market in the dollar. Correct?
Yes, I believe so.
Okay.
Yes, I very positive about gold. This is the chart of the gold. I believe the bottom in the gold was at the end of the at the beginning of the last year. This is this wave, the first wave of the counter rally. Yes. This is the second wave. I believe we need the third wave. Okay. We need go to the.
Let me ask you, Roberto. You know, a lot of wave guys. You know, there's always alternate counts and stuff, and a lot of people, Elliott practitioners. This looks a lot like a count that I've seen from Peter Temple. You know who he is? Peter Temple, World Cycles guy. All right, yeah. So what you're saying is this rally in gold, even though we could go to 1,500, it's corrective, but the real bottom in gold doesn't happen for several years, and it's going to be under 1,000, right?
Yes, I believe so. I believe so because this downtrend is in 5 waves. Yes, it's 1, 2, 3, 4, and 5. If you see 5 waves to the downside, the rally is counter-trend move to the 50 of retracement of 61. Okay.
Got it.
I believe that the market go to this level, and it's possible to go to 1,000 or below to complete the bear market from 5 years ago. I believe this is the very opportunity to buy gold to big rally for the future.
So that'll be your long-term buy down there. This is an intermediate term move to 1,500. Then we probably enter the phase where everything's going down, even gold. You have a view on the bond market. There's a lot of debate on, say, the 10-year note and yields. You have a view on interest rates in the U.S. while this is happening?
Yes.
Or do you want to go to a currency?
Yes. Yes. Okay.
Go ahead.
This is the other chart is about silver. Yes.
25.
The picture is the same. Yes. 25.
One of my partners is going to want a 8x10 glossy picture of you, Stelios, because he's a big silver bull. So he's now going to be a groupie of Roberto Ruarte now. Okay, go ahead, buddy.
Okay, yes, I very positive about silver. I believe silver is more volatile than gold. Yes, silver is more industrial than gold. Gold is precious metals, and now silver not only precious metal because in industrial is very important now. But I think the silver will rally to $25 or $22 in the 1 year or 2 years against counter-trend rally, but very important counter-trend. Okay.
Okay.
My prediction for Trump administration is the end of super dollar. Yes, the end the super dollar for me. A sharp loss in Wall Street. O sea,
well, you know, he's taking credit for the advance. So, you think he'll take credit if you're right on a 30% decline?
Yes, I believe the Wall Street will be 50% decline in 2 years. Okay, 50,
wow.
50 at least. Okay.
Wow.
I believe the market.
Where do you trade from, Roberto? Are you in Mexico?
Yes, I am in Mexico. Now I am in Argentina because I am Argentinian. Yes, but
okay.
This is holidays in Mexico.
Will you fix up an extra bedroom for me so I don't have to be in the U.S. if you're right? Where you could, you know, adopt me as your, you know, your uncle or something, and I could come live in Argentina with you? I'd rather watch it on TV than be here. Anyways, so
it's very cold here in Argentina. It's very cold here.
Okay. I grew up in Chicago. I know cold. So what does Sabita de Tasa hasta que se quiebra Wall Street mean?
Okay. Well, I'm going to show you about Treasury bond. Okay. I believe the key about the next bear market, because I'm going to show
interest rates going up. I bet you're a bond bear. I'm just predicting you're a bond bear. So it's going to be higher interest rates and a confidence crisis. So rates go up because the dollar's under pressure, and higher interest rates pop the bubble. Am I reading you correctly?
Yes, I believe so, because I can show you, for example, this chart. This chart is the 10 years, right?
Yeah.
Okay. This is Treasury bond. Yes.
Yes. Okay. 10-year yield. All right.
I don't know.
Yeah, it's up.
Yes. For example, this is a quarterly or monthly chart. The monthly chart, yes.
Yeah.
You can see here.
Yeah, we get back over 260. We get back over 260, and the trend in rates is sharply up.
Yes, but for example, the long term is the trend is down to the downside.
Right.
I believe this point is very important for me. I believe was the bottom. The bottom was 21 years of the downtrend in the interest. Okay, the top of the rate was in 1981 with Reagan. Okay, and then the market.
Well, Paul Volcker was the Fed guy who took short-term rates to 20%.
Yes. But take a look at this picture. This is 93. The go up very sharply. 90 and 94. And this top was the beginning of the tequila in Mexico, because this is the top in Mexico. Yes, this go up in this rally in the rates broke the bull market in Mexico and all emerging market. Okay, this rally in 1997, yes, broke the rally in Russia. Yes, it was tequila, vodka named vodka. Okay, and then this rise, increase in the rates, this rally in the rate was 98 and 99, and was the top of the Nasdaq of the .com. Yes,
exactly.
The was in
Right.
March was yes, and
Right.
and Nasdaq fell down 80% here. This was the top here, the
financial crisis.
Yes, Lehman crisis. Yes, here.
Right.
And the top, this is increased, was the fell down in Europe. Yes, and this increased the top for Mexico and Brazil. And then I believe that this go up in the rate will break the bubble in United States again. Okay, I believe that the interest rate go up to the 3%, to the 3%, and then at this point, I believe that the market, the stock market will break. Yes, the bubble will break.
Okay.
Which the increase in the interest rate broke bubble. This is bubble in Mexico, bubble in Russia, bubble in Nasdaq, bubble in United States, bubble in Europe, bubble in Brazil, and the next bubble will break. It will be United States, I believe. And this is the reason. The reason for me will be the increase in interest rates. Okay.
And you think 3% should do it?
Yes, 3%. I believe in the short term, I believe the market fell down now. Fell down. I believe this is only a correction. Yes, only a correction about this increase. I believe 2020.
Yeah, so once we take out 240, we're going to 270 or higher.
Okay. Yes. I believe this is head and shoulder. Okay. Maybe pattern. Yes.
So we should hold 2.2. Got it. Beautiful look.
Yes, it is maybe the head and shoulder, and believe the last increase in the interest will be fatal for the stock. Okay.
Okay, and that's where the market peaks. Do you have a number? You think we're going to trade 2,500 S&Ps, 2,480, 2,600? What do you think as far as S&P's potential price high is? And then we'll wrap it up.
Yes, I believe we are very near the S&P. I can see you. I can show S&P. For me, S&P is. Here is the chart. I believe this is in the medium terms. The increase from or the rally from
1800. Yeah.
Exactly. Yes, this is wave 5. 1, 2, 3, 4, 5. I believe we are near to complete with 5. I believe from the to count this is wave 1, wave 2, maybe wave 3 is near to complete, wave 4, 5 to complete.
That's what I'm seeing a lot. Yeah.
2,600. Okay.
Yeah.
But the other possibility is to count 1, 2, 3, 4, 1, 2, 3, 4, 5, and the rally is end. And then
so we're either going to get a 4, it's either done, or we're going to get a 4 and then a 5.
Yes, 4 and 5, or the end of the bull market. My difference from Robert Prechter is this is my teacher. Robert Prechter is announced the end of the bull market for the Dow. I can show you the charts from the big crisis. Yes, this is the counts of my master, my teacher. Sorry.
Yeah.
He's counting from here. This is wave 1, wave 2, wave 3, wave 4 complex. Yes, IBC and X and triangle, and 1, 2, 3, 4, 5. This is the end of wave 3 for 1932, okay, and
Yeah.
begin the best bear market here. The best bear market because the market may be during 8 years or 10 years or 11 years, okay?
Right.
But I'm going to write to the main newspaper about the stock exchange, because the people don't. This is the other form to see the stock exchange. You can see the market top here in 1906, okay, and the market not good business for 20 years, okay. This is the bull market, yes.
Right. The roaring 20.
Went down very sharply. You can see you put here, and the market 25 years, 26 years to recover this level, okay, and then another, yes, and then 16 years to recover this point, okay. And this is an important bull market, but here you have the crash of 1987, no?
Yeah,
this is the market again, and you can see again all this bear market, because in this S&P this level was similar, okay. In the Dow, this level was much bigger than this level, but in this S&P it was the same. And then I believe the top of the end of the beginning of this century, the market need 15 years to go up. Yes, I believe this is the business. 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 But the other are time to recovery, important crisis, and I believe we are near to end this bull market. Yes, my count is this. This is my count: 1, 2, 1, complex 2, 3, 4, 5. This is wave 3. Wave 4 is the 50% of decrease, and then a wave 5 to the upside. And in the next 10 years will be one crash like this crash. Okay.
So we have kind of like a 29 style crash, and then the market makes new highs after that.
Yes, because I use a Fibonacci numbers. The Fibonacci numbers in 1929. You can use the next crisis will be I believe in 5 years. 5 years. The next year of Fibonacci for me is 2021. Okay, in 4 years. Okay, I believe that the market in 4 years. Okay, I believe that the market will have a correction, very important correction, or more than 20%, the bear market, 40% perhaps, 50%, and then go up again for the last time, and we are had a crisis like this. Okay.
Okay. So you're looking for 30-40% soon, and then one more hurrah.
Okay. Yes,
one more big move up. What's the yen going to do during this time frame? I want to wrap it with the yen, because the yen is the big risk on, risk off currency. Do you have a chart you want to share with us quickly in the yen?
Yes. I can.
And aren't you glad you came on? You know, you're doing an excellent job. I could understand everything you say. So we didn't need any prepared questions for you to give an effective talk here today, Roberto. Great job.
Okay. Japanese yen, yes, I believe this is. I don't know that I think in the crisis, generally the Japanese yen go up and the dollar go down. No, but I don't know what happened with the chart. But because in the chart I know so bullish for the Japanese yen. Yes, I believe.
Yeah.
Yes. Okay. Yes.
So you're neutral. That's okay to not know. You sure have enough markets to be involved with. When you don't have a clear picture on the market, it's fine to avoid. Don't you agree?
I believe that the next crisis will be with the dollar to the downside.
Right.
I believe that it's possible to count this is 5 years up. The will way A will be B and we'll see downside. Okay.
That's what I was saying. Yeah.
I believe
okay.
because the difference between my counts and the count of my teacher is my teacher see a crisis similar to the depression. Okay, my count is very different. I believe this is 1, A, V, and C to the 95 or 19. Okay.
Yeah. Okay.
It fell down 40%. The yen fell down. The dollar fell down. You get the yen to the 60. It's 90, and here in the 90 will be the buy opportunity, the dollar against the yen. Okay.
Okay. What a great presentation, Roberto. I want to thank you so. I want to thank you so much for.
Sorry for my language because I can read English. I can read English, but it's very difficult for me to talk in English.
Well, you know what? I understood everything you said, and your work is outstanding. And I recommend that people follow you at least at the minimum on Twitter at Roberto_Ruarte. And you also have another Twitter handle at Ruarte Reports. And if you want to show your website and how people could get a hold of you, Roberto, go ahead and do that. Show your website.
Thank you very much, Dale. Thank you for your interview. For me, it's a very pleasure. My son told me, yes, my English is so good for Nigerian, for Thailand people, not for English people.
Yeah, tell your son you did it. In Dale Pinkert's opinion, your English is better than my Spanish. Okay. Tell your son that.
Then,
all right.
When you can go to if you can go to Mexico, my home is your home.
Wow.
Yes, and then it's a pleasure for us to receive you in any time. Okay, thanks for your call, and thank you very much for this presentation.
All right.
Okay.
You know what? You are now my trading warrior brother, Roberto Ruarte. Take heed of what Roberto said. You could tell he has a handle on some cycles and some nice, great to bring. Oh, Ricardo Dinger. Do you know Ricardo Dinger and Valeria Bednarik?
Ricardo, yes, he's a friend from Argentina. He's a friend from Argentina. Ricardo Dinger is
a Ricardo is? Ricardo?
Ricardo Dinger,
or
yes.
Valerie? Oh, yeah, Ricardo has helped me out in my communities for many years, so I love Ricardo.
Yeah, so, Ricardo. He's from Argentina, Ricardo, yes.
Okay. Well, you're now another trading warrior brother of mine. I hope pips rain down on you and all your subscribers, and I encourage people to stay in touch with Roberto, who I think has his finger on the pulse of a few waves that could work out in a big way. Thank you, Roberto.
Thank you, Dave. Thank you. Best regard for you and your community. Thanks for very congratulations for your job, and thank you very much for this interview again. Okay.
All right, buddy. Okay, everyone, that's it for me too. I want to thank Blake for his analysis today. I also want to thank Steve, and what a great interview with Roberto. So we'll wrap it up tomorrow, TGIF. Remember, don't just count your pips, count your blessings. And click on that subscriber button there, and see you tomorrow.
Okay, bye-bye.
Bye-bye.